Aloha everybody, and welcome to YouTube channel, Judy the Mortgage Professor, and we are here with Walter Bell with Aloha Agents today. Walter, tell us a little bit about yourself.
Thank you for having me today. Well, I'm a local agent here on Oahu, been in the business for almost 7 years. I love what I do. It doesn't feel like work at all whatsoever. I'm helping my friends, my family, and all my individuals out there find a piece of real estate here on the island. It's very, very awesome. I love it.
I love working with you, Walter. You are so very passionate about everything that you do and always a wealth of knowledge. So I'm so excited today to be able to talk with you about the recent changes in 2023 with condominiums. What is going on? Everybody knows HOAs are going up. HOAs, folks, remember, is your homeowners association dues, or AKA maintenance fees, as they are known here locally. So Walter, tell us what's going on.
Well, there's been some big changes going up. As everyone knows, COVID happens. We had supply chain issues. It was hard to get materials. Seems like labor's hard to find nowadays. Well, because of all of these things that have been going on kind of outside of the real estate world, they actually kind of carry over and impact various industries, real estate being one of them. So one of the big things with a condo building that I think a lot of homeowners don't really think about is that even though they're just buying a unit in this building, they still have all the same components that a regular single family home has. We have a roof, we have a sewer line, we have electrical stuff, and it's just built on a higher scale. Mm-hmm. And well, because of that, these buildings, they have insurance on them. So we always like to ask the question, okay, if this thing were to unfortunately fall down to the ground or disappear and need to get rebuilt or replaced, insurance companies look at that and they look at something called the replacement cost. Well, the replacement cost for a lot of the condo buildings everywhere in the nation has gone up. Mm-hmm. And that's because of material, labor, etc., all of these new initiatives being passed. And because that replacement cost has gone up, insurance premiums are going up with it. Now, some condo buildings, just like some, businesses, are extremely well managed. They've been sacking away money in the bank, and they can handle this increase in insurance premiums. But a lot of buildings, for one reason or another, they don't have the money in the bank to handle this new increase in insurance premiums. And because of that, they're having to increase their homeowners association or their maintenance fee dues to offset that. And so, from what I understand, when we increase the HOA dues, that impacts the property's value overall, because it impacts an individual's ability to buy this property because of the monthly payment. So how does that kind of impact, I would say?
Yeah, well, that is definitely the case. And what you brought up was absolutely true. As far as when COVID happened, generally when you have a home, people will sleep there, they will have dinner there, then we have a little breakfast there, but for the remaining of the day, they are at their jobs or they're at their school. What happened with the pandemic was that ultimately people were now at home, right? And they were home all day long. So if that elevator was going 500 times a day, now it's going 5,000 times a day, which, just like anything else, creates this wear and tear and really hyper moves that forward. So what ended up happening was everything was stressed. The elevator was stressed. The walkway was stressed. The door handles are stressed. The pool is stressed. The jacuzzi is stressed. Everything is absolutely stressed, which leads to more maintenance and thus having to repair more things. And of course, they're going to go after the health and safety things first, right? So when it comes to the elevator breaking down, that will be the first thing fixed, but maybe the walkway to a certain area is not fixed with little potholes or whatever the case may be. And those are the things that really pile up. And when the maintenance fees go up, you're absolutely right, the cost for the borrower or the buyer goes way up. And I think it also affects desirability a little bit, meaning that when they come to you as a real estate agent and they say, hey, Walter, I want to buy a condominium and I don't want my maintenance fee to be above $1,000. Or when they get pre-approved with a lender, we may use a placeholder, and that placeholder is $800. So if they are now searching for properties with maintenance fees $800 or below, they may be looking at different properties than a property that is priced a little bit lower but with a higher maintenance fee. And it definitely impacts their monthly cost. And moreover, maintenance fees generally never go down, they only go up, which means that for that particular buyer and that homeowner, they can expect that there could be increases as well during their duration of their home ownership.
That's very true. So if you're looking for a condo or looking to purchase a home in 2023 and going forward, some of the big things that are popping up for condo buildings, like you mentioned, so Judy is hitting the nail on the head. We were all home quite a bit. Instead of flushing our toilets once or twice a day, it was 8 times a day. So because of that, we're seeing the insurance premiums go up. We're seeing utilities. Usually in your HOA, your water and sewer is included, sometimes electric. Well, because of increased usage, we're having to pay a little bit more. In addition to that, we're seeing that some of these buildings, we had several building booms in Honolulu, Hawaii, 50s, 60s, and 70s being the primary years. Well, that means those buildings are 70, 60, and 50 years old. And just like your single family home, your roof, your sewer line, the building, they have a lifespan on those things. And so they're having to replace or repair roofs, drain lines, pool rec decks, etc. And once again, when they have to replace those things, there's a cost to it. If they don't have the money in the bank, they go and get a loan, your HOAs go up, and when your HOAs go up, the property's value either stays the same or goes down, and the borrower's ability to spend their mortgage payment on this home, their buying power goes down. So that's one thing to be aware of. So if we're looking at buildings, the condo docs that we get in every transaction is the most important. We want to make sure there's a plan in place to address these items for repair, but not only a plan, a budget as well, because that's the big thing that we need to be looking at going forward. And one last thing, you mentioned fire or life safety. That's a big deal here in Honolulu. We had a condo tower. It caught on fire, unfortunately. And because of that, we're having to retrofit fire protection in all of the condo buildings. So that's one thing, is if you walk in a condo building and there's a hallway with no outside exposure, you might want to see if it has sprinklers, because it might have to add sprinklers to that building. And that's a tune of $10,000 to $12,000 a unit just starting.
Absolutely. And just as you had mentioned in the beginning of this series about that condominium buildings are very similar in the realm of single-family residences, that you still have those same components. But I think what makes it really different is, like, let's say that you've got to refit your plumbing in your single-family residence. That may cost you $18,000. But for a building that might have, or a project that might have 5 units, that could cost you $18 million. So, and you've got to figure out a way, while those pipes are being fixed, how are you going to relocate these people or work around their different units and what's going on, so that they do have access to water and they are able to live in these units. Or maybe you have to get off-site housing for them while it's in the building, depending upon what that piping looks like. So I think that's what really is driving a lot of these costs way up, is these big projects, even though they could have been addressed prior to COVID, because of the lockdowns, all of that stuff, they were left until well after COVID. And because of that, we did have people that were out of work, so a lot of maintenance fee deficiencies have occurred, right? So when you get the condominium disclosures, just as you had mentioned, and here in Hawaii, folks, one of the major pieces of when we get the suite of condominium disclosures, as Walter had mentioned, there is a number of documents in there. It speaks to the condominium itself, the age, the bylaws. It speaks to also the financials of the building, as Walter had mentioned. And there's one particular document in there. It's called the RR 105C. And in Hawaii, that's the name of the condominium disclosure. But remember, across the nation, the different condo packages may have different names. But here in Hawaii, it's called the RR 105C. It's about 40 questions, and it generally is provided by the maintenance company or property manager. And what they do is they mark a number of questions that pertain to certain things about the buildings. That would be how many units are in the building, how many buildings are included in that project, who is the insurance provider for those buildings, is it a mix of only Is it fee simple, or is it a mix of fee simple and leasehold? And if so, how many units? It also discusses the maintenance fees. And when it discusses the maintenance fees, it also discusses the delinquencies associated with the maintenance fees. And all of that can affect your financing. From the lender standpoint, when we look at condominiums, there's usually going to be the two buckets. The first bucket is going to be your warrantable condo. And what that means is that it meets the requirements set by Fannie Mae or Freddie Mac for conventional financing, or for FHA financing or VA financing. If you are pursuing FHA or VA, Veterans Administration financing, those buildings will need to be on the approved list. VA requires 100% that is on the approved list, or you cannot move forward with a VA loan. The FHA loan, up until about a couple of years ago, did require that it was on the approved list. But now they have brought back something by popular demand, which is called the spot approval, meaning that the entire building does not need to be approved. But if you can show that the unit that you're going after is FHA approvable, meaning that it's meeting all of those criteria set by the Federal Housing Administration, then we can actually close an FHA loan on that particular property. So that's what we're talking about when we talk about warrantable condos or townhomes, is that it is meeting the criteria set by these agencies. On the other hand is going to be non-warrantable condos, and that's a really big bucket. It can be a condominium or townhome that misses the agency guidelines by just a little bit, or it could be something completely outside the box, like a condotel. What is a condotel? A condotel is a resort condo here in Hawaii, generally used for short-term rentals, although it can be used for long-term rentals as well. But most recently, it's been used for short-term rentals. Very, very popular, hot topic right now. In fact, we have Condominium coming up on April 21st, sponsored by Fidelity National Title, and that's going to be at the City Financial Tower downtown, and that is all about condos, what that means, short-term rentals, and how do we finance those different things. But to go back to our topic, when we find ourselves in the non-warrantable condo bucket, what that means is that is going to greatly affect your financing. Now it's not going to be eligible for traditional programs. You are going to be looking at portfolio programs only, and portfolio programs by nature means that the bank is unable to sell your loan to these different agencies. So because of that, they will be funding the loan themselves, servicing the loan themselves, and for that there's a premium that is charged. And because of the risk associated with non-warrantable condos, it will increase your down payment contribution. So generally you cannot get into a non-warrantable condo with less than 10 to 25% down, sometimes 30% down or more, depending upon how much outside of the box it is. And also one of the premiums that you may pay is a little bit higher interest rate and a little bit higher cost, especially if you're going after a short-term rental. Because of the income generated off of that property, it does put you into a different risking class. And let's put it this way, kind of like what Walter had mentioned and what we've been speaking about, what happened with COVID, excessive usage. When you have a short-term rental, if you've got a long-term rental, you've got somebody in there that stays there for 30 days. If you've got a short-term rental, you may be swapping out a user or a tenant every single night. And that, of course, is going to increase wear and tear, not only on the unit, but also on the building. So there's a lot of restrictions in regards to what you can use the unit for, how it's zoned, and of course, how Hawaii law treats that. Do you want to talk just a little bit about STRs and short-term rentals and what that...
You said a little bit. Did you hear that? So STR, short-term rentals, it's a big topic, a hot topic on the island right now. Number one, they are legal only in certain areas. We have 6 special use districts in which they can be done in. They are lucrative, to say the least, depending on where you buy your short-term rental. Of course, along with any investment, we got to look at the numbers to make sure it makes sense. There's different calibers of buildings out there. Some buildings, they actually charge you to have a short-term rental in there, like the Ritz or the Trump, for example. But there are a lot of buildings located in the Waikiki area, Turtle Bay, Ko'olina, Kahala, actually Makaha, and Laie, where you can do short-term nightly rentals. Of course, we want to make sure that all the guidelines are being met as far as having like your transient accommodation tax, your GE tax, there's other fees associated with it, that you're in compliance with the advertising as well. And in addition, you want to make sure that the building you're in, even if it has nightly rentals in it from some units, the whole building may not be able to do nightly rentals. So we want to make sure, is it a non-conforming use or is it actually a resort zone building? But short-term rentals, we have a list of every building on the island in which you can do it. We can easily share that building with you, and we are able to finance those as well, like Judy had mentioned. The down payments are a little bit different, but they still are financeable, and so it's a great, I would say, investment property to pick up. Let me tell you, I look at profit and loss statements all day long, and these things, they do generate quite a bit of income. It's pretty impressive, actually.
It really is, and I think that that's one of the biggest reasons why we actually have a huge influx of interest when it comes to short-term rentals and condotels, but there's not a lot of education out there surrounding these things, and then of course, just like anything else in today's world, it is far-reaching. So we get calls almost every single day from mainland investors who are looking to come in. They don't understand the difference between fee simple and leasehold. They see something online for $98,000, and they think that they are going to get, a $800,000 like kind of a property that they've seen in the news or in advertisements, and they don't understand that the property, because that property may be leasehold and because the lease is very short, that they may not even be eligible for financing at all. And the reason why that they are so well priced is because they may need to be purchased in cash. Do you want to tell the folks today a little bit about the difference between fee simple and leasehold?
Sure. Fee simple, I think everybody has a good idea as far as when they buy real estate, at least in the mainland and locally, that when the assumption is when you go to buy something, you own everything you see. You own the land and you own the home and everything in between. That's what fee simple means, 100% ownership of that property. Leasehold is where we basically take the property and we split it into two. And Judy will own the land, and she gets to own that land going forward into the future for whatever term she sets, 99 years, 50 years, 20 years, whatever it may be. I get to then buy from Judy the ability to use that land. Now, for 99 years, this is mine. She's not welcome in this property at all whatsoever. She comes knocking on my door, I slam it shut, lock her out. But after 99 years, 50 years, 20 years, she's going to say, hey, Walter, if you want to keep this piece of paper, you're going to have to either sign a new lease with me and pay me more money, or I want my piece of paper back. Here you go. Or the third option, she'll say, you know what? This part of it, I'll sell it back to you, $500,000. Now I own both parts. So leasehold, in a lot of ways, is like what we see on the mainland, where you have a piece of land where you can bring a manufactured home, park it there, and rent the land from the landowner for X amount of time. The only difference here in Hawaii is that a condo building, it's pretty permanent. Last time we tried to move one of those, it didn't work so well. So usually the landowner takes the condo building back and they either release it, but usually they tend to resell it as a fee simple unit. As Judy had mentioned, we are seeing very little leasehold properties, and because of the current economic environment, a lot of those landowners, those fee owners, are actually looking to sell their fee to either the individuals leasing it or to an investor who can then take possession of the property at some point in the future. So leasehold, very, very, about 2% of the properties I would say are leasehold. We would probably encourage you to look at a fee simple property. In addition, leasehold, it's not only harder to buy, it can be harder to sell, and because of that, financing is very difficult to obtain on leaseholds. So with that being said, fee simple is usually the way to go, and that's what provides you all of the great benefits of real estate that we've come to expect, where appreciation, equity, return through income, etc. So that's the benefit of, I think, a fee simple versus leasehold.
Absolutely. Well said, Walter. And just as Walter had mentioned, when you have a leasehold property, you are paying rent to the leasehold owner or the lease owner. So that rent can be anywhere from $100 a month to $5,000 a month, depending upon what the landlord wishes or has contracted you to pay. And at any given time, just like rent, it can go up. If there's a renegotiation period or if the lease expires, that does give exposure and that does cause some issues. As Walter had mentioned, if you own the unit, but the land beneath you is something that you do not own, what do you do with that unit if the landlord does not renew your lease or they want to increase it to a space that you don't feel comfortable paying over time, or as an investor eats up all of those profits, so next thing you know, you're left with nothing at the end of the month, and it doesn't make it a very desirable investment for you. And then in regards to financing, it does make the financing very challenging. So it does not stop you from getting financing in some cases, but if you've got a very short lease, meaning well below 15 years, there's a good chance that it's not eligible for financing at all, because that means that in less than 15 years, that property could be exposed for the lender to a possible foreclosure situation, or that the current owner is unable to renew that lease. If you do find a leasehold property and you are interested in it, then ultimately what you have to look for, if you're looking for a 30-year loan, is that you would need to have what we call an overhang on that lease. So for government loans such as FHA or USDA, that lease would need to be at least 10 years or more, but technically we call it 11 years because we never count the year that you're currently in. And then if you're going for conventional financing, they're going to be looking for a 5-year overhang or 6 years, because once again, we do not count the year that we're in. So this can increase cost, it can increase risk, and of course, for someone that is not really sure of what leasehold means, it could be a risky investment.
So I would say most of the time, whenever I have a client reach out to me about leasehold properties, I say think about it as a long-term rental. Not only are you responsible for what you would normally be responsible for when you own a home, so with leasehold you have a monthly lease rent. In addition, you still pay the taxes, you still pay the insurance, you still pay the HOA dues. So when you think about it as a long-term rental, I always say just take that amount of cash or the purchase price, divide that by the lease term. So let's say it's $100,000 over 20 years. That's going to be about $500 a month or so. That's your base rent. So usually, who buys leaseholds? These are individuals who are coming to Hawaii or maybe living here. They usually don't have anybody they're going to pass down anything to, or they've done well to where they've already allocated what they're passing down, and they want to find something that for the price, $100,000, $200,000, they can get more square footage, be closer to the beach, and at the end of the lease, they don't care what's going to happen because they're probably not going to be here. So they buy it, they get to live by the water at a fraction of the cost as it normally would cost, but they don't get any of the equity, and at the end of the day, the property's going to go back to the landowner.
Absolutely. And you brought up a really great point, which is especially if they have a building that has a mix of fee simple and leasehold, if they have the cash available, a fee simple unit may be going for $800, whereas the leasehold unit is going for $225. So because of that, they can still command the same amount of daily usage as far as overnight cost, and they can really bank on that profit because of what you mentioned, that their exposure to the actual costs are so much less than if they had bought it at the fee simple price.
Well, and also, here's a good example. There's a building a lot of people know. They're where it's called Discovery Bay, right down the road from Ala Moana. And actually, for the past few months, there's been about 10 or 11 units up for sale. And within the past month, every single one has gone under contract. And here's the reason why. Well, Discovery Bay is going to be buying out the remainder of the leasehold interest from all of the parties and then converting the building to fee simple. So these owners who bought a one-bedroom for $300,000 right in the heart of Waikiki are going to be offered the land for about $200-something thousand. It's a deal. It's a steal.
Yeah.
But that was the risk these owners took because they did not know what was going to happen in the future. And this risk they took, it's going to pay off for them. But that is one scenario, is what's happening right now, because leasehold, is not something that the state or our city and county wants to have going forward. We want people to own real estate, we want them to be in their homes, and we don't want them kicked out of their homes at the very end of it. So like Judy had mentioned, you're able to get into higher priced buildings, let's say $800,000 for a fee simple one bedroom going for $300,000. But sometimes you're given this opportunity to pick up an $800,000 condo well below the actual market cost.
And that is just such a great reason why they need to be working with an expert in that arena, because a traditional real estate agent that is not versed in these areas would not be able to explain that to them and would not be able to follow them all the way through perhaps this particular purchase up front and what it could happen and pan out to later on down the road. And in addition to that, just as we had mentioned regarding warrantable condos and non-warrantable condos, it is 100% essential that you work with a lender that truly understands these type of properties and what type of financing is available. It is very common that you may have a property and that you're interested in, you take it to a traditional lender, and because they just don't know what programs are eligible in this type of building, or they're not aware of what is going on with this particular building, they may lead you down the wrong pathway because they just don't understand what type of financing is available or not available in this type of a section. So with that, make sure that you are working with a full-blown expert, both on the real estate side and on the lending side, in order to really make your investment dreams come true, especially when you're dealing with short-term rentals. So very important to work with an expert.
Well, and sorry to interrupt you there, but that's actually how I met Judy, was because I've worked with numerous lenders, and they're great, but I would say, hey, what about this building? And like, oh, let me check. Hey, what about this building? Oh, let me check. With Judy, I can say, hey, what about this building? And she's like, oh, I know exactly which one that is for any building I've brought to her so far. So as far as finding a good realtor to help you find a short-term rental or get a loan for that building or whatnot, really finding the great loan officer who can go look it up but actually knows it better than the back of her hand, that's what you're looking for.
Oh, thank you, Walter. I think I'm going to owe you lunch after this. Well, thank you so much, Walter, for being here with us today. As usual, just amazing knowledge. And everyone, if you enjoyed the content today, make sure that you hit the subscribe button, make sure that you hit the notification button, and of course that you like us as well. So have a wonderful day, and we look forward to talking to you soon. Aloha.
Aloha.